So next up, we have a presentation from Aurumin Limited with the ticker code AUN, a company focused on the exploration and development of its advanced gold projects in Western Australia. To tell us more, I will hand you over to Managing Director, Brad Valiukas. Good afternoon, Brad.
Good afternoon, Jane. Thanks for having me today.
Let me bring up your presentation.
Thanks, Jane. So thanks for the introduction. As you said, we're gold focused. We're Western Australia. Relatively simple story. We've got resources, we've got good ground, and we intend to take them through to development and pour gold bars. So we listed just almost 2 years ago now. We've had a firm focus on building a mining company from before the time that we listed. We've got a good board and management team, plenty of experience there in development and operations. 2 advanced regional gold plays in WA, Sandstone, now with the 946,000 ounce resource, as well as our Southern Cross assets. Interest of time today, I'll just focus on Sandstone. We've been delivering on our growth ambitions. Sandstone certainly embedded in, delivering on its upside potential. We've updated the first resource there, and hopefully I can show people that may have looked at the project before that really this is a different project to what it was 12 months ago. And we continue to actively look to leverage our skill set, operations and development into other projects. And of course, we are ongoing and active on the ground. So a couple of key takeaways here on the company overview. Board and management at 14%. We're heavily invested into this, and this represents real money that we've put in to take the company forward. And the other thing is just our EV of $16.3 million, close to or just under that 1 million ounces of gold resource. So really sort of $16, $17 there per ounce, not including value for infrastructure or our Southern Cross assets. So I think we fantastic value for anybody that's interested. The team, I won't go through that too much, but I will say that we have plenty of capacity, and I'll talk about going through to development. So myself as a mining engineer, 25 years experience at Northern Star prior to this, and fixing up a bunch of operations there. Also on the board, Sean Day, corporate finance, previously Northern Star as well. And then I've got some great people in the business. Project manager at Sandstone, used to be the head geologist at Jundee as an operation. He's come there to take that on as a project. I've got plenty of other good capacity there in the team as well. So ESG and sustainability, something we take very seriously. I'll just touch on environmental stewardship. So all of our projects have previous production history at Mount Damo, Mount Palmer, Johnson Range, as well as Sandstone. And in particular, the first 3, we've actually done a huge amount of work to clean those up. So all of those are looking much, much better than they were previously. And the last one, we are absolutely committed to low carbon footprint. And I think, we're in the process of signing some CAs on stuff that would be industry leading. I think when we come to production, it'll be a little bit different to what everybody else does, and also very cost effective. So Sandstone Operations, as I said, I'll just talk about that and focus on that today. So it has 881,000 ounces right there in Sandstone, as well as 65,000 ounces down at Johnson Range, which was a project we had when we listed and was previously a little bit stranded, but can easily now come up to Sandstone. So we're sitting at 946,000 ounces. And certainly for us, this is really just a starting position. I'll run through all of these in a little bit more detail, but existing permitted infrastructure on site. As I said, this is a previous operation. Great starting position, just upside to come. We're expanding the footprint, we're improving the resources, and looking to make this bigger and better all the time. And then Sandstone, one of the reasons we got into this area is that, from Gidgee down to you and me, there's about 7 million ounces in the region. We've got just under 1 million of those, but there's certainly something bigger and more significant to do there in the long run. So the infrastructure, I can't, it's a little bit old and it's a little bit tired, but I can't emphasize how important it is to have this sort of setup when you're trying to get going and shorten the time frame and save costs. So there's a 500,000 tonne per annum process plant there. There's a known upgrade to 750,000 tonnes per annum. I think we can take that to 1 million tonnes per annum with the addition of some leach tanks in the front. But really importantly is it's fully permitted, and we can turn that back on anytime we want to spend the money to get it going. The other on-site infrastructure that's there's offices, there's workshop, we've got bore fields and bores, there's plenty of water in pits now as well. There's still some tailings capacity there, there's roads, there's a built-up ROM pad and other supporting infrastructure. So very good way to start. Just up the road at Sandstone, 15 kilometres away, we've got 3 camps in the town there, exploration office, there's a good FIFO suitable airport there in town as well, and then bitumen all the way from Perth to Sandstone. So we're not out the back of beyond anywhere. This is something that's very tangible. It's easy to get up there either via flight or drive, and a great position to be. And as I said before, certainly when we talk about this plant, we're targeting something bigger in the long run. There's an opportunity there to set up as a low-cost regional processing hub. Historically, more than 1 million ounces has been produced here, and we think we can certainly do that again. So our Central Sandstone resources, as I said, we've got 881,000 ounces there, 1.5 grams per tonne, 18 million tonnes. We've just increased that from 1.1 grams per tonne, and that's a direct result of getting in there and targeting drilling into places where it would add the most value. Our resource development so far has been around that Shillington and 2 Mile Hill area, but there's 9 other resources to continue to work through. This was last operated by Troy Resources in 2010. So we've got a really good handle on what recoveries are, milling issues, etc. So expecting recoveries greater than 90% for everything, and certainly between 90 and 97%. And we think still significant upside remains just on the mining leases. Talk about that in a couple of slides, but certainly got multiple geochem and structural targets sitting right there, and really good footprint, as I said, 20 square kilometres. So the 2 Mile and Shillington open pits, we've just increased the resources there to 180,000 ounces at surface, and we've added sort of about a third of a gram to each of those. So we're at 1.1 grams previously. We've increased that to 1.5 and 1.3. At Shillington, we drilled some great holes through there, 6 metres at 5.5, 7 metres at 5.5, 8 metres at 5. So they're the results that have fed into this resource upgrade. 2 Mile Hill underground. So this was a key driver when we purchased the project. So there's 500,000 ounces that have been reported here previously as an underground resource at 1.1 grams per tonne. And a lot of people look at that and go, it's a bit light, and we did as well, but we also looked at it and we saw the upside. So we've put 4 big deep holes into this, 340 metres at 1.3, 220 metres at just under 1.5, 350 metres at 1.5 and 240 metres at 1.2, all drilling through a series of stacked loads, sheeted veins running through there. So we've turned around now and we've changed the resource to 1.6 grams per tonne, and we've still modelled that in a very bulk fashion. We haven't sort of concentrated anywhere near on the high grades and tried to isolate anything. This is still a bulk resource. We've got 1,400 ounces per vertical metre there, starting at 150 metres below surface. When we look at this, to start with, we looked at this and we saw we've got a mining cost there of about 1 gram per tonne as a big bulk operation. Stopes 30 metres high, 20 metres wide. We were targeting a resource inventory there of around 800 ounces per vertical metre at close to 2 grams. We're sitting there now with 1,400 ounces per vertical metre at 1.6 grams. So the 800 ounces per vertical metre at 2 grams is certainly in there, and we're doing some internal scoping work on that at the moment. And certainly we're well above what's going to be a cut-off for mining there of about 1 gram per tonne. So there's quite a bit of margin. We're really pleased with how this has come about, and this really resets the project. This is an asset that has the size and scale to underpin an operation here for close to a decade. So we are super pleased to have turned it around and increased the grade. As I said before, there's plenty of upside. This is just still on the mining leases. We've got 11 geochem targets that we've completed that resulted from work that we've completed with an auger rig there. Most of them are backed up by structural controls, what appears to be structural controls in the geophysics as well. So this is our next drilling target on site here. We've got about a 10,000 metre program we want to do between these targets and some others. And we think we can bring a number of new resources to the table. We did a really good job at Shillington and 2 Mile on the surface and the underground, making the pie that we've got there a bit better and increasing that grade. And we think there's plenty of opportunity still to make the pie bigger. We're 100% focused on generating that critical mass for production. We're certainly not out here targeting nice big resources that we're not going to do anything with, but these are all near surface targets, right in the shadow of the headframe, so to speak, just a couple of kilometres from the process plant. And then on top of that, we've got well over 100 square kilometres of granted exploration tenure outside of the mining leases. So we've got some really good targets. We've got geochem ongoing there at the moment, and hopefully before the end of this month, pending performance of the labs, we'll get out an announcement with results from some of that. Prospective structures, we've got sitting on the left-hand side there. On the western side, these are the shears that run up from you and me. We know there's gold mineralisation there, and there's been previous mining in and along those structures. So super happy to have that as an exploration footprint. On top of that, we've got a large amount of application further to the north, and we've just also acquired a tenement we announced this morning up just south of Gidgee, the old historical Birrigan Mining Centre, which has got some super high grades there, and we've also pegged a decent portion of greenstone there to try and expand that. So we've got a lot of upside to go on top of what we've got just around the previous operating centre. Our Johnson Range project, touch on this right at the start. It's just it's to the south of Sandstone. There's good roads all the way. Previously for us, this was a stranded deposit. We've got 65,000 ounces down there at 2.5 grams per tonne. I think we'll get a slightly higher grade when we get to a final mining shape there, and certainly that will truck up to sandstone. And when we're ready for feasibility, this will certainly be a part of it. Our other assets that we have in the portfolio is the Southern Cross assets, 2 historical mining areas down there, Mount Dimer and Mount Palmer, and I won't go into those too much, but I would encourage anybody that's looking and interested to have a look back through any of our previous announcements or presentations. Mount Dimer mined 600,000 tonnes at 6.4 grams per tonne, and Mount Palmer mined 300,000 tonnes at 15.9 grams per tonne. There's a lot of work still to do down there, and we think a lot of upside at Mount Dimer. We've got a few deposits up there that are basically drilled out, small and high grade, and we're working through the process of how we're going to monetize those at the moment, and there's certainly an option that they can go to sandstone as well. So the key drivers for us, our investment drivers, clear focus on building a mining company. We've got 946,000 ounces already at Sandstone, very cheap on a per ounce basis for our market cap. We've been adding ounces to that project. We've been adding grade to that project, advancing those existing resources and targeting new resources and expanding the footprint. So it's certainly a project that's ongoing, expanding and improving all the time. Got good board and management team. We can certainly take these through all the way to development. There's no changes required in the group of people that we already have on board. We've been delivering on our growth ambitions, and we are still very active on that front. First resources are updated at Sandstone to demonstrate that, and then we have that ongoing exploration activity. As I said, Sandstone's that dual focus of optimising existing resources. It's not a greenfields project by any means there, and we're advancing those new targets to add in more resources, and geochem results out soon, and drilling to restart on those new targets. So expecting a constant flow of news at that time. Anybody that's interested, please feel free to contact us.
Brad, thank you for the great presentation. We've had quite a few questions come through, so let me jump into them. So what is the estimated refurbishment cost of the processing plant?
Jane, so at 500,000 tonnes per annum, we're talking about $20 million, and that includes new gravity circuit, new crushing circuit up front, and an upgraded milling circuit. That's about half the cost to build a new one. So it's certainly not nothing. It's a decent amount of money, but it's certainly a very good restart. We think we go to 750, 800 for about $40 million. Again, we're talking about half the cost of building a new one, and 1 million tonnes won't be too much different from that. Certainly there's the opportunity to pick up a bit of decent secondhand gear around the place at the moment as well, and maybe reduce those costs.
Wonderful. A couple of questions just on the life of mine. So do you have an estimate on the life of mine, and are you confident in extending this through further exploration or project acquisition?
So life of mine at the moment, when we look at that 2 Mile Hill underground, we talk about that as underpinning future production. We don't want it to be everything, but it's certainly a really good base load that will come through. The current resource there now, we target to about 7 years. Obviously, none of that's a JORC statement, and we haven't completed a feasibility, etc. But if you look at the resources there now, 500,000 ounces, if we talk about a 70,000 ounce per annum production rate out of that as a standalone just for the underground, you can sort of get to those numbers pretty easy. Are we confident? We're confident about adding resources just right there on the mining tenements. It's amazing, given the historic production area, how light some of the geochem and the historical work has been, and certainly when it was operated previously, it was really just focused on oxide, not necessarily fresh milling dirt, but just oxide soft material. So yeah, we're super confident that we can extend the project life.
Wonderful, Brad. That's all we've got time for today, but thank you so much for joining us. And as Brad mentioned, please reach out by the contact details on the bottom of the ASX releases for further details. But thanks so much.
Thanks, Jane.